Yeah, absolutely. One, thanks for having me on here. I really appreciate it. Hopefully it's informative and we can do something. But yeah, I work for Residential Capital Partners. We are part of the National Private Lending Association. I'm very much involved in this space. Hard money is something that you have to have in this business. Banks are not flexible unless you have, access to true private capital, rich uncle or something like that. You have to be quick. That's the main thing that we want to just help people in the space accomplish is speed. More than anything, it's a relationship based firm. We are a balance sheet lender. So what I mean by that is we actually don't broker or sell our loans off. We hold our loans throughout the entire loan term. And so we have all this money in house that we're looking to pour into projects with really experienced investors. The one thing that we have that most every other hard money or private money lender doesn't have is we offer 100% leverage. So we will actually fund your entire project, purchase price and rehab, 100% of both. And so I can speak more into that specifically if there's interest. But that's us. We want to do no money down funding because you can do more deals. We want to be fast. And yeah, we're just looking to work with guys who have some pretty interesting projects. And it's more of a relationship thing for us. So you got a good deal. We want to fund it as fast as we can. So.
Gotcha. So I got a question. I got one of my guys in the audience has a question too. So to kind of piggyback off what you said, you're 100% program lender. Can you kind of break down that? Like, how could someone get 100% loan? I know how it is. It's 70% loan to value, but can you break down how they can get to getting 100% loan?
Yeah, absolutely. You said it right there. It's 70% LTV. So loan to ARV, of course, these are fix and flip loans. So, we got to make sure you have some equity in the deal and you would want that as well. If you're flipping homes, you don't want to buy a house for 100, put 50 into it and sell it for 150. No one makes any money. You'll lose money after, you pay the interest and whatnot. So 70% is a place that we want everyone to be at because it guarantees you want a decent profit margin where it's worth your time, first and foremost. And it's a comfortable margin for us as a lender. If you have something with that kind of equity, the risk is very low for us. If we know you, we trust you, we want to do business with you. Why wouldn't we fund 100% of your deal? Every other lender does around 70 or even 75 LTV, but then they say you got to pay, 10, 15% down on the purchase price. Even if it's 75, don't be swayed by that because 90% of 75 is 67 and a half, right? 100% of 70 is 70. So even then we're beating them on the advance. There's a lot of false advertising as far as what the final loan amount is. Mm-hmm. And so 70 ARV, to answer your question, if it costs you less than 70% of the ARV between purchase and rehab, that is when your loan is fully funded. So I can give you specific numbers on that, but just take your ARV, 70% of that, you'll have 100% finance loan. So
gotcha. Okay. Corey, get ready to ask your question. You got to unmute your mic.
Can you hear me?
Yes.
Yeah. So to get a hard money loan, what is like the minimum personal credit score that you need in order to get a hard money loan?
Yeah, great question. So I want to go into this. I'll tell you all the requirements very briefly. We have 4 of them. Credit is important, but I'll say credit with us is not as important. We are a balance sheet lender, and so we actually don't even pull your credit. All these other lenders, they're selling the loan, so they have to. Wall Street or whoever ends up holding that loan won't buy it unless there's a hard tri-merge, hard pull, your credit's affected, and then they got to pull it, every 3 months or whatever the requirement is. We do a soft pull, so we check your credit, but there's no actual credit pull because we're not selling the loan. There's no reason for us to do that to you guys. The minimum, though, with that said, as a soft pull is a 620. So as long as you clear a 620 soft inquiry, you'd be fully funded, and we can do some business. The other 3 things I'll just go ahead and mention. Hopefully it answers questions. In addition to soft 620 credit pull, we want to see 3 things. The second thing we want to see is a 1040 personal tax return. That's one thing that is different that some people don't want to show and provide, but you can have negative income. We actually don't care about the income at all. It's our investors, our private money. They just say, hey, show us your tax return. It only just, displays you did your due diligence. and filed your taxes. That's one thing we have to do to get you qualified. The other two are easy. You got to have previous rehab experience, and you got to have some cash in the bank, depending on the size of the deal you're doing. After that, it's about as many deals as you can find under 70% you want to fund. So it's pretty awesome.
All right, so
now go
can you
ahead.
hear me?
Yeah, we can hear you. Go ahead.
My question. Hold on. So I forgot my question, man. Give me 2 seconds.
You're good.
All right. No problem. Hunter, so I got a question for you that I've been getting a lot from some of the guys in the group chat. So what if they missing requirements? Like, I know you say you all don't pull credit, but let's say if I didn't have the experience, because I know sometimes when I didn't have the experience, and it's on a company by company basis, everybody had their own rules in house. I've dealt with a hard money lender that basically coached me through how to find out what I needed. Like, I didn't have a credit score on my first flip. So he kind of coached me on how I could bring somebody in, pay them a fee. They go on the loan, and I just write up an operating agreement on the back end to get the deal done. And that's actually how I got my first deal. Are you all that lenient to where you'll coach somebody how to get a deal done?
Great question. It's pretty simple to answer your question. We are lending only to entities. And so the question is, can you partner? It's kind of the bottom line. There's a number of ways to do that. You can be considered a silent partner, like you're saying, like they go do the deal on a single member LLC, and then y'all edit the operating agreement later. Or before you close the deal, hey, I got my own LLC, but I want to do this deal with a partner. I'll edit the operating agreement to be, 60-40, 50-50, however y'all decide. With partners, we underwrite holistically. So if we have multiple parties, for example, and one party is missing one of the requirements, we are more lenient there because we are looking at two people on the deal. So you definitely can partner, and credit. There's a way, if you got someone who's a 619 or something, but the partner's an 820. Technically, can we not lend? Yes, but we are more than willing to reconsider and look when there's multiple parties involved. We don't want to be that hard set because, again, we're not selling to Wall Street. We're not meeting these requirements just to sell a loan. For us, it's common sense lending. Why cut somebody off if they have maybe exactly a 620 or 619 or whatever, but we got a partner with an 800 and they all have a ton of cash and they got a really good deal. We don't want to be that cut and dry. There are some things that we have to be on, but I'd say with multiple parties, it's very easy for us to look at a deal holistically. So
Gotcha. Mon, go ahead, ask your question.
Hey, Hunter. My question was, what's the percentage on the money? How much it is, and is it like the repayment process? Like, do you have to keep it for X amount of time, or could you, is it a prepaid penalty if you pay it back shorter?
Yeah, great question. So the interest rate right now, I'll tell you this, even though we're not selling to Wall Street, our cost of capital is still affected. I'm sure y'all are aware that this last week, the Fed raised the rates, again, another 0.75 basis points. And so, for our loan, we're still very, very competitive, but when the rates go up, everyone's affected. So right now, we are looking at about 11.75% on 9 months, but it's 100% financed. So, that's the opportunity cost. You may get someone who in this market does 10% down on purchase and they may be 11. Well, okay, but then you got to bring 20, 30, 50 grand to the closing table, where with us, you're, not in the position to have to do that. So 11.7%. And then your second question was in regard to prepayment, correct?
Correct.
Okay. Yeah, there's no prepayment penalty. So if you want to sweep out a house and sell it next week, we would love that, because then we can do another deal immediately. Just keep adding. So there's no prepayment penalty at all. Yeah, it's on 9 months though. So you do have to at least pay us back before the end of month 9 on that loan. Or you can refinance that loan. So if you're not just flipping properties, but you want to hold it, we'll actually put you into 30-year money straight out of the initial 100% loan, which I'll tell you, a lot of people are doing that right now just because they don't want to have to flip it. They'd like to hold it. So.
All right. Hunter, I got a question for you. I forgot my question. So look, so my question is, how's you all's draw schedule? Like,
Yeah.
everybody's draw schedule is different. You know, some people, if you send them pictures, they'll fund the same day. Some people only fund on Friday. Some people, they got to send an inspector out. It takes 2 weeks. And that's important to know, because if I got contractors to pay on Friday and I got to wait till the inspector get out there and he get the inspection report back to the lender, and now my guys are looking at me like we need to be paid, but I'm like, I'm waiting on the draw. They don't care. Like, so how's y'all's draw schedule?
Yeah, absolutely. We don't have a set schedule, first of all, so it's totally up to you. It's the first option that you mentioned. We just want to see photos of what you're drawing for, and we wire that money same day. So it may hit your bank account, in 24 to 48 hours, depending. But yeah, it's immediately out the door. We let draws go every day, and all we're requiring right now are photos. So it's pretty easy. The reason a lot of other hard money lenders have the inspector deal is mainly because they don't have that money. They don't have the money in house. Yes, they want to verify your draw, but it's almost like, give us 14 days to get your money.
Yeah, they stalling a little bit.
Right. Yeah, so whenever we close a loan with a borrower, 100% of their rehab money is put in an account that we have on file in our treasury. So we're already prepared for you to draw. That's why we do it that way, so we can get it out very quickly.
Hey, so. and y'all who never took out a hard money loan, that's a great way to operate, because as an investor, you don't want to have to wait on your money. Like, this is probably one of the smoothest draw schedules I've seen, outside of another company that I dealt with, that send pictures, they fund same day, boom, boom, boom. But that's good, Hunter, for sure. Corey, go ahead and ask your question. You can go ahead and unmute.
Yeah. What states do you lend to?
Yeah, we're in every state except 2. We can't work in Arizona or Nevada, but we can lend in any other state.
Okay, so Corey, you up in Boston, right?
Yep, I'm up in Boston, but I'm thinking about trying to do something in Memphis, Tennessee, or St. Louis.
Okay, cool. Hunter, do y'all do like refinance loans? I know y'all do the 100% fix and flip. Is that like y'all bread and butter, or do y'all have other stuff that y'all lend on?
Yeah, so great question. That is our bread and butter, only because it's 100% and everyone wants to use that loan. But no, right now our refinances are unbelievable. We actually just 2 months ago got a full staff on long term, and we're doing a ton of cash outs right now, for example. But you can also do rate and term refinances out of current hard money loans or whatever. But yeah, we do 30-year DSCR paper. So it's debt service coverage ratio is what that stands for, and it just means if it cash flows, we'll fund your deal. So literally, you just got to show us that the rent will exceed your monthly payment. We order an appraisal and open title within 30 minutes of a completed application. It's a completely independent process, but it's going fast. I guess last month I had a few loans with our new staff. They closed a 30-year loan in 14 days, which for 30-year, that's pretty fast. Fix and flip, but you want to be under 14, which we do. But most people, 30-year takes 30 days to 45. Banks take 60. So we're able to do that very efficiently right now.
Nice. So you all do refinances.
We do.
Yeah, I got it. The reason why I asked that question, that was a personal question, because I got a couple houses that I need, I need to try to figure out what I'm gonna do with them. So I'm just gonna refinance them and turn them into rentals. And that's one of the things too, like in this market, with the interest rates going up, the buyer pool is shrinking, and now we got to pivot. So instead of sitting on my hands, I'm like, man, I need to try to refinance these things, get a tenant in there. So do the tenant need to be in there with the refi, or is the rehab enough? Like,
yeah, so we need a lease. They don't have to be in there when we close. We just need a lease, because that's what we're going to use to determine the DSCR and make sure your rent is exceeding your payment. So we do need a signed lease, but they don't have to be in there yet. So
gotcha. Mon, go ahead and unmute your mic and ask your question.
And I can't even think of the question. It was on the tip of my tongue. Come back to me.
All right. Corey, go ahead and ask your question.
Yeah, I wanted to know, can on a hard money deal, can I use the land that I own outright as collateral as like part of the 30% or whatever to get a hard money loan?
Yeah, so technically, I mean, all we need is true cash and experience. There's no collateral when it comes to that to qualify. So I wish we could, but unfortunately, our investors do require just minimum cash requirement and rehab experience. Those are the only things that we consider, really, at the end of the day, in addition to the credit and the tax return and whatnot. But no, we will just need to see those met. But if you sell it, then you can put that in your checking account and we'll get this thing rolling. So that'd be the only way, which I maybe wouldn't recommend. If you're short on cash, I would say go get a partner. Get a partner, give me a call. Let's get an LLC set up, and let's get a deal done.
All right. And my second question on a refinance, is that only on a home? Like I can't refinance a piece of land, right?
Yeah, we're not doing land refis at all. We're just doing really single family 1 to 4 units. That's our bread and butter. We can go up to 8 right now, something a little bit bigger. But we're doing small residential investment properties, and that's where we are. So.
Gotcha. Okay. I want to talk about the deal that we were working on. It was like a portfolio deal. And I just want to break it down to them because, we had a portfolio deal of 9 units. It was a quadruplex, it was a single family house, and it was 4 lots. And I think the 4 lots is what, took us out, what made the deal kind of fizzle out. What do you think we could have did to try to save that deal? And it's still out there lingering. It just because a lot of people like you all don't do new construction, right? But we had those 4 lots. So I'm just trying to see what else could we have done to make that work? I know we was playing around with the numbers, but I don't think those 2 parcels, the quad and a single family, was enough to verify the price.
Yeah. Looking back on that, man, I'm trying to figure out and remind myself, but I know that the issue was the ARV because you're buying them in bulk. Mm-hmm. From our perspective, our loan really is best with just independent deals. Each property stands alone. 70% of the ARV we can close on it. With that said, it can be applied to portfolios. This last 2 months, I've done multiple 21, 35 single family deals. But they're all single families. There's not mixed in lots. Some of that just gets harder because we have everything that we do in that regard is based on an appraisal. And so the appraiser, when they went out there, tried to view that quad and independently, where your single family that we did for you was exactly 68% LTV. So it's very easy for us to do that. And if the quad was that way, we would have done both. Honestly, man, I'm trying to think. I don't know if I have any recommendation at all about how we could have solved that. Just it's hard for us from our perspective as a lender, and we don't want to be short-sighted, but our money, the only way it works at 100% leverage is if each property stands alone at 70% ARV. If that's the case, we can do it. And then since we don't do land alone, that also complicated things a little bit more. So we may not have been the best lender for that deal specifically. But for any single family deal or quad independently or together without lots, that's 70 cents on the dollar, we would do 100% on that. So, yeah, man.
Yeah, the lots was kind of throwing it off, and I knew that, but still trying to work it out. But Corey, give me 1 second. Everybody who just got into the group chat, if you want to ask a question, raise your hand and I'll get to you. So Corey, go ahead and unmute your mic and ask away.
Yeah, I want to know, do you have a minimum loan amount?
Yeah, great question. Right now, $75,000 is our minimum, and you can get there between purchase and rehab. Okay.
All
right. Ashley, go ahead.
Hey, Hunter. So my question is, what are your origination fees and interest rates currently?
Yeah. So on the 100% fix and flip loan or the long term or both, I can answer both for you if that helps. So our fix and flip product right now for 100% of purchase price and rehab cost is 11.75% on 9 months with no prepayment penalty. And then at closing, you'll pay 3 points. So we're 11.75 and 3. And the reason for that is, again, we're funding your whole deal. And so, if you think you'd rather pay, 2 points, we would say no problem at all. But you'll have to pay 10 to 15% down with the other lender. That's kind of how it works. It's pay one more origination point for your deal to be fully funded. And so, on a $75,000 loan, that may not be as big of a deal, but if you got 3-4 loans out of the door, 10 to 15% down can be crippling. You might miss that 5th deal, that 6th deal. That's where we want to come in. And so I hope that answers your question. 11.75 and 3. And then the long term right now, fully dependent on the Federal Reserve, just because that's 30-year money. However, still pretty competitive right now. We're about 7.125% on 30-year money, which I'd say is about half a point to 75 basis points below the average DSCR lender. Most of the people I talk to from our competitors are high 7s, low 8s. And so we're very, very competitive on the long-term side of things at the moment. And origination there is 2 points. So 1 less than the fixed flip.
Tyler, I got a question based off what you just said. So look, so the standard is 11.75 and 3 points at 9 months, right? Do you all become more lenient with more experienced borrowers? Like if I came with my proof of experience and I've done 40 deals, would I get, lesser points and a better percentage rate, or is it just one size fits all?
It is one size fits all. Until this month, we were 10 and 3. So we've gone up to 11.75 temporarily. The moment the rates go back down, as they will, we'll go back down to 10 and 3, 100%. We've been that before now for 13 years. And it doesn't change. What does change with experience, though, is as I worked with you and Erica before on desktop appraisals. Mm-hmm. So we don't have to get in appraisals on some deals if you're a very experienced borrower, which means we can close in potentially 7 to 10 days or less, just because we're not going to order an appraisal. So that's one thing that you do get with experience. But as far as the terms, those are the fixed terms. Just because it's 100% leverage. There's a lot of lenders that do have kind of a sliding scale, but their max LTV or max loan to cost is going to be 90%. And so, yeah, I mean, it's, we want to be there where we can. And when it makes sense to not pay any money down, we want to do that. So.
Gotcha. Sheila, go ahead and ask your question.
Hey, thank you so much.
No problem.
Okay, so I had a question about the 100% fix and flip loan. I came in a little late, so I wanted to know, how does that work? I understand that it's 75,000 is the minimum, but how does it work as far as, do you have to have a certain amount of experience? Is there certain states that you can and can't do these loans on?
Yeah, sure. I can briefly summarize again. As far as location, I'll start there. We can lend in any state except 2. So we cannot lend in Arizona or Nevada, but we can lend in every other state. As far as the 100%, it's 100% LT or 100% up to 70% LTV. So it's a fix and flip loan. We still got to make sure you're making money. A lot of lenders are around 70% LTV, but you have to pay, 10% of purchase price or 15 or whatever it is. Where with us, it's 100% of your purchase price and your rehab costs, as long as those numbers are not more than 70% of the ARV. So that's how that works. We're just writing loans up to 70% of the ARV, where a lot of other lenders, they may say, as I mentioned earlier, there's this huge group of lenders that says we go up to 75 ARV. Well, but that's with a 10% down payment, so 90% of 75 is 67.5, where 100% of 70 is 70. And so we have one of the highest advances in the market, even at a 70% ARV cutoff. But that's how the 100% program works. I hope that answers your question.
Yes, and I had a question about your DSCR program.
Sure.
So that one is also 100% or is it 20%?
Yeah, so great question. It depends if you took it down with the rehab loan first, because if we're refinancing your payoff, you potentially get it to permanent money without you putting anything in the deal, or we actually can give you cash out on top of the payoff, depending on what your payoff is. So if you buy a house, the BRRRR method, I'm sure you're familiar, buy a house, rehab it, rent it out, and then refinance. If you're on 100% leverage loan and we just refinance that payoff, you might pay, an origination fee, but that's the only thing that you put in the deal. So you can get it on a permanent DSCR money without any form of down payment. The only time that you would have a down payment on the DSCR loan is if it's a turnkey property, there's no ARV, and it's a purchase. Because we can't do 100% on something that's as is. It's all based on the future value, the future ARV. So that would be a 20% down payment if it was just, hey, I want a 30-year note on an as-is turnkey property. But most people who are rehabbing homes, it's very, very easy, even in this market, to get cash out on top of the current payoff when you put it in a refinance, or just take the current payoff and we'll refinance up to 80%. So if your payoff is less than 80% of the as-is value, you wouldn't have a down payment to put it on permanent money. So that's how most people get it to 30-year money without anything in the deal. Is you have to start with the 100% finance loan, I guess, is the best way.
No, that was
Awesome.
that was a great question and a great answer. Because, like I said, Hunter, Monday morning you're gonna wake up to an email, and I'm gonna be applying for 4 refinances.
Okay, perfect.
Yeah, man. I didn't know y'all did refinances because we were so focused on getting that portfolio deal done, tunnel vision.
Yes, sir.
But I'm glad I asked that question. We got a couple more, and I know I'm gonna get you up off here. And let's ask a couple more questions, and let's see. Ashley, go ahead.
Hey. Okay, give me 1 second to find my question.
Okay.
So in the meantime, while she's finding her question, the formulas, right? I know we've been talking hard money, but the way I learned is actually, like when I'm looking at a deal, I was taught to do the formulas, like 70%, the ARV times the rehab and all that. Can you kind of talk them through the formula and this going to help in multiple ways. This is going to keep people from just bringing junk to you, because now they know the formula it don't even make it, to being presented. So
right.
Can you kind of go over the formulas to make sure that it's a deal, so they're not just bombarding you with bad deals, quote unquote?
Yeah, sure. Basically how we look at it is we're going to take purchase price plus the rehab. So purchase plus rehab, we would just call that total cost. Because that's what it costs to take it down and rehab the house. You take that and you divide it by your ARV. So it's loan to value, but really it's loan to ARV, because if we're doing 100% loan, then it'd be loan to ARV. So purchase plus rehab divided by your ARV, that'll give you a percentage. If that is less than 70%, it'd be a fully funded loan. So an example of this, it's exactly at 70%, would be buy a house for $300,000, put 50 into it. So 300 plus 50 is 350. Your ARV is 500. So 350 divided by 500 would be exactly at 70%. You would have a fully funded loan. We'd fund 100% of your purchase price at closing. And then rehab, we'd have 100% of that 50 grand in your escrow account that you draw overnight as needed. So
nice. I hope y'all caught that. And I hope y'all following along too, because the thing about it is, one thing to hear Hunter say it, it's one thing to hear me say it, but when you actually write it out, it does something different. Like you retain it better. So I'll put this formula, in the group chat and the Telegram, but make sure y'all actually, when we going over stuff, writing it down, because we're not going to always be right here in front of you. So, you'll definitely retain it better. Ashley, have you remembered your question yet?
Yes, I got my question.
Okay.
Okay. Do you guys offer recourse or non-recourse loans?
great question. I get asked that all the time. So our loans are recourse, as most are. We don't have a true non-recourse loan, but we're lending to an entity. And so the only individuals who will be personal guarantees are anyone who's more than a 14% owner in the entity. So if you own more than 14%, so 15% or more, then you will be considered a guarantor, and it is a recourse loan.
Thank you. And then my second question is, how do you guys handle loan repayments? So some lenders require monthly interest, or some require both principal and interest repayments.
Yeah, great question. On the fix and flip loan, it's interest only, of course, with no prepayment penalty. So you will have interest only monthly payments, and you can pay us off at any point in time. If you close, I'd say after the 20th of a month, you won't have a payment on the first. You'll have a payment on the following first. So sometimes people who close late month won't have to pay until, technically, I guess, 5 weeks or almost 6 weeks later. So, but it's interest only, and that's when payments are due on the first of every month. And then what was the second part of your question? I missed that. I'm sorry.
So my second part is, or do you guys make the repayment schedules interest plus principal?
Gotcha. So on the fix and flip loan, only interest only. You pay us principal back at repayment or refi or whatever that is. And then on long-term DSCR money, we do have principal and interest payments. So you do pay those. You can, though, opt for an interest only loan. And so, for the first 5 years or whatever we can figure, you could have an interest only deal. So the short-term money is all interest only. Long-term is considered principal and interest, unless you would prefer to be on an interest only loan, and we can do that. So.
Thank you.
Yeah.
Hey, so on that interest only, right? Just for clarification, if based on that example you just gave, you got a house for 300,000, the rehab is 50,000, so you're all in at 350,000. The interest only payments will be 1% of that, which is 3,500 a month, correct?
It would be, so let's see, we closed 300,000, so 50 grand be an escrow.
Okay.
Yeah. So then on the interest rate I just told you, it would be let's see. So 5 times 300,000 divided by 12. So you'd have a $2,937 monthly payment until you pay us off, because that'd be 11% on 300,000.
Got it.
1.5%. Yeah.
So 2,900 and some odd dollars a month, right? So make sure y'all are factoring this in when y'all underwriting these deals, because you're gonna have to pay this every single month. So I just want to get clarification on that. Couple more questions, and we're gonna let them go. It's 7:35. Got about 5 more minutes. Go ahead, Mon.
Explain that one more time for me. Just go over that for me. How y'all got that number?
Oh yeah, the interest payment. Yeah. So the interest rate for the 100% loan is 11.75 on 9 months with no prepayment penalty. So it's on 9 months, but an interest rate is annualized. So what we're going to do is we're going to take 0.1175, right? That's 11.75% times the principal of this deal, which is 300,000. If you bought a house for 300,000, put 50 into it, sold it for 500,000. 11.75% on 300,000 at closing is $35,250 a year. So if you divide that by 12, it'd be $2,937.50. So you just take your interest rate, multiply by the I guess purchase price, and then divide that by 12. That'd be your monthly payment.
Thank you, man.
And I'll put these formulas in the chat as well. Did he answer your question, Mon?
Yeah, he definitely did.
I appreciate it. Ashley, is this you got a new question?
No.
That was the same one. Okay, cool.
Yeah.
Hunter, I appreciate you coming out, man. Do you got anything you want to leave with the group before we let you go?
Yeah, absolutely. One, thank you again. I would love to get to work with some of you guys in the future. Rashad, I know we will be. But yeah, we love lending to people with good deals. We've been in the space a long time. We are a flexible balance sheet lender, just trying to get our 100% program out there as much as we can. And I'd love to speak with any of you guys. If you have further questions, I see there might maybe a few more. Would love to share right now. I'm going to put my contact. You can as well if you want to, but I'm going to put that in the chat. Because if you want to reach out to me directly at any point, please let me know. That's my name. I'm putting my email right now. And then we can hopefully do some business. So I really, really appreciate the time.
Oh yeah, for sure. And you know, you'll be getting a lot more stuff, because I think I'm gonna put this first one up on YouTube. Like everything else will kind of be, you know, within the community, but I want to get it out there. So you'll definitely be getting you know, some traffic. Mon, you got one last question before we let Hunter go? Or was that?
I'm good.
Okay, I thought that was the same. Okay, I figured that was the same one. Well, Hunter, man, I appreciate it. Hey, that was great, man. Hey, 30 minutes of fire. You went through pretty much everything. You went through the formulas, credit scores. I even learned something on this call. I didn't know y'all did refinances, so that was a saving grace for me. So I appreciate it again, man. And we'll talk soon. We'll talk tomorrow for sure.
Sounds good. I really appreciate the time, and y'all have a good rest of your Sunday.
All right, you too, bro.
Thanks, guys. Take care.
All right. All right. Anybody got any questions for me before I let everybody go? I know we've been kind of talking all day in the Telegram chat. Hunter came with some great game. I'm also going to put these formulas. I'm going to have my VA write up these formulas and put them in a PDF form so you can print them off and put them in your office, put them in your home office, you know, screenshot it on your phone. So anytime when you underwriting deals, you'll have that formula right there. I think somebody had their hand up. Ashley, did you have your hand up?
No.
Okay. I'm still getting used to this webinar thing. Usually Jim would be running the show, but it's about 6 in the morning in the Philippines right now. Oh, this Sheila. Let me see. Go ahead, Sheila. Sheila, did you?
Yes, I'm here. Okay, so there was some great, exciting news, honestly. My question to you is, do you know if he does new builds?
No, he don't. I know for sure he don't, because I'm recording this, so you'll be able to watch the replay at the beginning. A lot of those questions he had already answered. But the thing is, we was doing a 9-unit portfolio, and what made the deal blow up is they don't do new construction. And part of that 9 units was 4 lots. So they don't do new construction, but I do have a new construction lender that I could forward to you. You know, try to help you get a deal done. But that particular company don't lend on new construction.
Okay. And what about condos? It doesn't matter, right? It doesn't matter what kind of property it is.
Wow, that's a great question. I wish we can get Hunter back on, but I don't know if they do condos, because I never danced with him in that space. A lot of people stay away from condos pretty much because of the HOA fees attached to them. But that's a good question. I can ask him on the back channel, and I'll put it in the Telegram chat what he says. But I'm not sure if he lands on condos or not. My gut is telling me no. They pretty much hang their hat on single family 1 to 4 units. They can go up to as high as 8 units if they like the deal. But I think they mainly do single family, but I'll definitely ask them.
Thank you so much.
No problem. Hey, y'all, I'm gonna let y'all go. I appreciate y'all coming on here. Y'all asked some good questions. Hunter, he came with a lot of game. I'm gonna continuously bring different people from my network up here to talk to y'all and help push y'all over the finish line. Today it was hard money. Tomorrow it might be, something else, one of my developer guys, or, someone who's done 1,000 flips, and show them how he scaled to that number. So stay tuned. Stay active in the chat. It's going to be open to midnight. And if y'all don't got any more questions for me, I'll see y'all on the other side. Holla at me.